Yesterday, I asked you to remain short on both gold and silver and see what we have achieved. I hope you all profited. Now, what is going to happen today? Which position you should take in order to make profit? We will see with the help of candlestick charts and indicators. Do not forget to like, share, subscribe, and comment. Do not forget to press the bell icon. If you are committing this mistake by not subscribing this channel, definitely you are missing on the profits, as I share my daily and weekly updates on major commodities and indices. So do watch the analysis and do enjoy the trades. First, we'll look into gold, followed with silver. Let's start the day. Gold on the hourly charts is creating higher base. Now they're taking the support from 1776 levels. Previously it has taken the support from 1774. As I told in the evening analysis, now the only short entry is below 1770 levels and a long entry beyond 1784 is good to go long. So yes, 1784, which was previously a good support, now it is going to be the resistance. Beyond 1784 you can look forward to 1790 and plus levels. Directional movement on the hourly chart is bearish. Stochastic at bottom. The MACD has crossed over and this is a bullish cross here on the hourly charts. RSI is trading flat and it is near to bottom, and likewise if you look at the 2-hour chart, see it is moderately giving you lower highs and higher lows, trying to trade and trying to consolidate in this narrowing triangle, and this is a consolidation phase. A breakout beyond either upside or downside is going to be strong. So yes, you can go long above 1784, go short below 1770. In between these $14, you have to be cautious by not taking a position there. So in fact you can go short below 1775 itself. Let's reduce the zone a little and you can go short at 1775 or 74 better. So in between 74 and 84 do not trade. So almost $10 now, do not trade in between these $10. Directional movement bearish, stochastic looking downwards, and if you look at the MACD, this is wide and bearish still, and if you look at the RSI, this is trading near to the bottom out there. Look at the 3-hour chart. Likewise, if you see the previous two candles almost giving you lower highs and higher lows, indicating that it is trying to break out either side. And on, if you look a little wider range, then you will find that it is trying to trade in this and probably looking for a breakout, and that is why I say any move below 1774 and any move above 1784 will be good to go long or short. Below 1774, remember, it has got its support at 1770 and then 1764, and below that we may see a very good drop on the downside towards 1750 levels. On the upside, if it breaks past 1784, again you can see it may try to achieve 1784, 1790 levels, and then beyond 1790 again 1795 will come into picture. It is bearish on the 3-hour chart. The stochastic is trading near to bottom here. If you look at the MACD, this is also white divergent bearish, but it may start to converge. RSI trading near to the bottom. Likewise on the 4-hour charts, consolidation and a breakout is awaited. Let's see in which direction it goes, but probably it may try to reverse a little, go till towards 1788, 1790 zone, and in fact beyond levels are also possible. Let's be attentive because see, this is trading near to the bottom of the Bollinger Band, getting the support out there, hence it may retrace a bit before looking forward to decide a direction. Directional movement here is bearish anyways. The stochastic is at bottom, trying to rise from here. If you look at the MACD, this is still bearish. It is parallel and it is diverging, indicating that there is more bearish still. RSI trading flat near to bottom, and if you look at the daily charts, on the daily chart, see this is a trend breaking candle. It was trading in this bullish zone. It is a trend breaking candle out there. Probably see this is a bigger candle, and if you look at the last 3 candles, last 4 candles, the highs there are very well connected. And yes, even if it tries to rise first, it may find a resistance at 1790, then 95, and then 1800 levels. Beyond that, yes, you can consider that as bullish and it may fly away on the upside. So we will look forward to, if it continues to trade bullish and it continues to break the resistance on the upside, 1802, 1803 is something you should look forward to. But let's be watchful which direction it goes. On the downside, once it breaks below 1774, see, still it may get a very strong support at 1770. This is a very strong support here. This is a 100 period and 50 period and 20 period moving average crossover here, where you can find 20 period moving average and you can find 50 period moving average crossing over here. So be careful. It is trying to still indicate little bullishness on gold in the near term, and probably once it breaks below 1770, it may get a stronger drop towards 1764, 1750 levels. So Yes, do not trade between 1784, 1774. Confirmed again. Directional movement is moderately bullish. Stochastic looking downwards. The MACD is willing to converge crossover. It is trading in green since long, and RSI is trading flat. Considering this, yes, go short below 1774. Go long above 1784. Target is going to be towards 1790, 1795, and the most important resistance is at around 1800 to 1803 zone. On the downside, if it breaks below 1774, go short for 1770 and then 1764. Below 1764, we may see a very good break. Trade accordingly and trade with a stop loss, trade with a trailing stop loss. It may rise a little before looking forward to a drop. Now let's have a look at silver. And yes, before we proceed, if you want to appreciate and support the effort which I am delivering daily, in fact, I am creating 5 to 6 videos daily for multiple commodities and markets. You can be a patron and you can support the cause and the effort. Definitely it will motivate me. The link for the patron website is mentioned in the channel. It is, the subscription is will hardly cost anything. It is less than a cost of the meal for you for one time. So please become a patron. Reach out to me for more details. Now let's have a look at silver. Silver trading below the critical resistance zone at 2040, 2050. This is going to be the milestone which it has to break, and it is trading bearish. However, it is also trying to consolidate a bit, failing to go past the lower support at 2010, and see it is trading at the bottom of the Bollinger Bands. Probably it may try to reverse a bit on the upside, but let's have a detailed look. Directional movement bearish, stochastic oversold, and if you look at the MACD trading in the sell side, and it is still bearish. RSI looking downwards on the hourly charts. Likewise on the 2-hour charts, if you look at on the 2-hour charts, a retracement and then a drop out there. And if you look at the drop formation, see on the 2-hour charts, it is still trying to indicate bearishness. The support there 2010 is strong, and below that 2000 is strong. These two levels you have to be watchful of on the upside. Now you can go long at 2030, and about 2030 you can expect that we may see it hitting 2040, 2050 levels, which is a stronger resistance zone on the upside. Directional movement bearish, stochastic looking downwards. The MACD is still on the sell side. RSI is trading flat and near to bottom. And if you look at the 3-hour charts, on the 3-hour charts, so this is the red candle formation, and it is also giving you higher lows. Hence you have to be watchful of 2010 and you have to be watchful of 2030. Beyond 2030, definitely long entry can be taken, which might take it till towards 2040, 2045, 2050, and then 2060 will come. So yes, these are the resistances. And directional movement, if you look at, this is bearish here. If you look at the stochastic, this is at bottom. The MACD is bearish. The RSI is also looking downwards. And if you look at the 4-hour charts, on the 4-hour charts, this candle is trying to give you a breakout, and in general a reversal after the breakout appears difficult, but then it may try to keep the lows out there. It may not try to break this high here. Hence 2030 is a very good level, beyond which if it trades, definitely one can go long. On the downside, it may get a very strong support at 2010, and yes, you can go short below 2010 levels and go long about 2030. Directional movement, if you see, it is bearish. Stochastic is oversold. MACD is still bearish. You can find out, see, it is diverging and it is bearish. RSI is looking downwards. Considering this, go short at 2010, go long at 2030. Do not trade between 2010 and 2030. In fact, you can go long at 2025 itself. I am just trying to reduce the levels and such that you can benefit or profit the max. So you can go long at 2025. Then remember, 2030 is a good resistance. 2035, 40 and 50. See, it can rise in fact till towards 2060 also. So there are resistances there, but be watchful of 2040, very strong resistance, and then 2050 the next strongest resistance. So in between 2040 and 2050, it may try to find a balance and then probably reverse from there. So if it is bearish, it may not be able to fail, or it may not be able to break this zone, and hence, but yes, you can take a long entry 2025 till 2050, 2060. You have to keep trading with the trailing stop loss, keep trading with the stop loss at cost at least, so that you can profit. On the downside, if it breaks below 2010, go short, but below 2010 it may find a very strong support at 2000 levels, and then 1980 will come into picture. Below 1980 we may see a good drop. So take your positions accordingly, trade with the stop loss, trade with the trailing stop loss. Do not forget to like, share, subscribe and comment, and become a patron. Reach out to me, and the link is mentioned in the description. Thank you very much. Have a great profitable trading day ahead. Thank you.